Ryan Reynolds here from Mint Mobile with a message for everyone paying big wireless way too much. Please, for the love of everything good in this world, stop. With Mint, you can get premium wireless for just $15 a month. Of course, if you enjoy overpaying, no judgments, but that's weird. Okay, one judgment. Anyway, give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
Congratulations. Congratulations are in order for every one of you who purposefully tuned into this program, because that puts you among the most intelligent people on the planet, because you want a better future. And congratulations are in order for all of you who accidentally tuned in, because you're about to get schooled on how to invest.
And what about those people whose radio dial is just stuck right there? They've tried to move it left, they've tried to twist it right, and it just can't. Oh, God.
Time
and it
for
won't
a new
turn
car.
Off either.
Time for a new car.
Okay. It's kind of like my house. My wife's, I can't turn it to the, it's just stuck on you all the, anyway. So.
Oh, that's just the little dab of super glue in the old 1940s radio that you
no,
have
I'm talking about my
lips.
Don't put that super glue there. That'll be the end of a lot. So, anyway. So,
It would
thank
work
you.
out.
Yes,
From
thank
my
you.
perspective, it would work.
That's true. Thank you for joining us, and happy holidays to all of you.
Unless, of course, you're listening to the podcast and it's not.
Well, it's still going to be the
happy
holidays.
Whatever.
All right, it's close enough.
Happy being's really smart, because you are really smart. The vast majority of the population really doesn't think much about investing. And I'm sorry, that doesn't make you smart. If you don't save and invest, you're not among the brightest people on the planet. If you've decided it's time to do that, congratulations, you just moved up the intelligence scale. If you've been doing it for a while, even better, but let's get you doing it right. That's the purpose of this program. There's a lot of stuff that passes for investing out there.
That's true.
That isn't.
That's very true.
A lot. More than you might think. And by the way, just to let you know, hello, I'm Don McDonald. That's Tom Cock. We host this here show called Talking Real Money, and we encourage your participation in the program at the following phone number, 877. That part means it's a free call, even though no one makes toll calls anymore. 877-397-5666. 877-397-5666. Think toll-free numbers are almost an anachronism now.
Oh, they really are. And by the way, if you don't call, and if you do call.
If you don't call.
We'll get to that in a minute, but if you don't call.
I feel badly for you.
Well, no, because if you don't call, I'm just going to start reciting my Christmas list, which, could take up 2 hours. It's online, but you can see the items there, but I'll start going through them.
You actually think you're getting something?
Exactly. Well,
you're just going to be disappointed again this year.
Why is this year any different than the others?
Yeah, exactly.
But if you do, call and you're part of the show, we're going to give you a handy-dandy 13-month free calendar.
Yeah.
It's full of chock full of great quotes.
And by the way,
hints.
Just in case you might think this is one of those calendars you get from the insurance agent. Or from the car wash.
No, please.
Where you get, it's bad scenes from nature or kittens, or something. This is not that, where they have their name kind of stamped at the bottom of the calendar.
Every month has the hole so you can see the, Joe Blow's insurance right there. No.
It's not one of those.
No, this is nice. It's big.
As a matter of fact, it's big. This is a 12 by 12 heavy-duty calendar created. I designed the whole blasted thing.
Indeed you did.
I did. I designed. It is one of a kind. It is unique. No one else will have a calendar like this one.
Well, unless they called and got a free one, too.
All right. Only the people who called and got a free one or clients of our firm.
Clients of our firm. Yes, okay.
Or people who come to the class.
And I'm going to give one to I'm going to give one to each of my brothers, too, because I'm kind of cheap for the holidays, so.
Oh, it's my gift for everyone.
Well, they're both clients,
I'm giving it,
so I guess I'm
giving it to everybody. No, I'm just putting it under the tree. Y'all get a calendar.
There you go.
But I was going to say, we're doing our last lunch ed class of the year.
Yes.
On Thursday.
Indeed.
In Tacoma and Buffalo.
Yep.
Buffalo, which is just fun to say, Buffalo.
And
sounds like you have a lisp. If you sign up and you come to the class, you'll get a calendar. So you can call the show and get a calendar.
Or
you can sign up and come to the class and get lunch and a calendar.
You show up at Don's house Christmas Eve, you'll get a calendar.
And you'll get a calendar.
There you go. That easy. Or call right now with your question, anything related to money and investing.
877-397-5666. Give us a call.
Tom and Don are talking real money.
Let me just take a second to share something new with you. We're going to start doing our lunch ed classes that we do at our offices in Phoenix and Portland and Seattle. We're going to start doing them online as a webinar at the same time. So you can attend too. You just won't get lunch. You'll have to go get lunch. But it's also cheaper. It's only $5 a ticket, and you get a full color worksheet and some special perks. So sign up for our upcoming lunch ed classes right now at talkingrealmoney.com, talkingrealmoney.com. It's under the events section, and you will get a real investing education on a variety of topics. So go to talkingrealmoney.com, talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Hi, if you think investing is confusing, well, my friends, you're not alone. And if you think, you're a smarter than average person, but you go, I just don't get investing, you're not alone. Smart people ask for help. That's why we're here to help. I'm Don. That's Tom. Our number is 877-397-5666. This is a confusing business, but it doesn't have to be. It does not have to be. Part of the problem lies, only part, there are other problems too. Part of the problem lies in the fact that we confuse two words. We confuse investing with speculating. So today, live on Talking Real Money, we're going to play Speculating or Investing. That's all I have for it.
And now I need to throw something out there that you can decide whether it's a speculation or investing.
Here's what we're going to do. Here's how we're going to play the game.
All right.
We're going to play the game. There are prizes.
Whoa.
There are prizes, and you don't win a prize for getting the answer right. You just get a prize. This is like America. You get prizes for participating.
Fifth place is a medal.
You still get a prize.
Yeah, okay.
So everybody who participates in speculating or investing not only gets the free calendar, but they get a copy of Tom and I put a book together about about real investing last year.
Yeah.
You're going to get a copy of that too.
Wow, you're really
I'm being really generous today, aren't I? Really generous. You are going to be in charge of fulfilling these orders.
Oh, God's sakes. Gives me something to do for the rest of the weekend.
I'm the one in charge of deciding what we're giving.
Okay, so we're giving, we're giving the calendar
to callers, just to general callers, okay?
But if
they participate in the game.
This is almost confusing as investing, but okay.
Here's how the game is played.
Yes.
You or I will pose a question.
Yes.
A product, an idea, a concept. Is it speculating or investing? We will not answer it for a little while. Eventually, we will answer it. You, as a caller, can pose the same question. Is it speculating or is it investing?
Okay.
And
so can I ask one
now? And the correct answer will be
Yes.
determined by our panel of experts on investing. That would be me and that guy over there.
Okay, so can I throw one out now?
I would appreciate it because we're playing the game.
Amazon stock in 1997 at $1.50 a share.
Oh, you took this from Jason Zweig's article this morning.
I did. Yes.
All right. Buying Amazon at $1.50 a share.
Yeah. And by the way,
$1.50 a share.
Let's just because sometimes people hear that stocks and bonds and all this jargon. A stock is partial ownership in a company.
No, wait. No, that's where they punish people in Puritan society.
I know where you're going. Yeah, okay. I'm always hoping to install one at my house. But those are stocks. Therefore,
you'd spend a lot of time in it.
Probably.
You really would.
That is completely different than a bond, okay? A bond is a promissory note, if you will. It's an obligation to pay you back. The stocks have no such obligation.
No,
because equity in companies sometimes it goes from $1.50 to $750 a share. Sometimes it goes from $1.50 to zero. It happens.
I think you just answered your own question.
Okay, yeah. Okay,
you
thank
did
you.
in a way. Think about it for a
Yeah.
minute. The way he answered the question, or the way he described stocks and how that may. This is a clue for you. You could win a book by getting this right. Here's a clue.
Goodness sakes.
What did he say? Amazon stock in what year?
I think it was
how much?
97. I think it was
97 was $1.50 a share.
Yeah.
Rose to about $7.50.
56, yeah. Mm-hmm.
$7.50 and change. So $1.50 to $7.50, $750. But it went to that. But did you know that in the mid-90s? No, you did not know that. Could it have gone to zero? Their answer is hidden in there. I think you can figure this one out. While we let you mull that over, Catherine, you're on. Welcome to Talking Real Money.
Hi, Catherine. Happy holidays. How can we help you?
Yeah, I have my rollover IRA at Vanguard. I've got some inheritance money that I came to, and then I have a traditional IRA at Fidelity. So I was thinking about putting it all in one company, at Vanguard. But are there any pitfalls that I need to be concerned about?
That's a great question because it is one that seems to come up a lot because we all have this belief you don't want to put all your eggs in one basket, right? I mean, but right. Vanguard is a reputable firm. Vanguard has, I think Don looked this up last week, $2.5 trillion that they take care of, something like that. If Vanguard were to go out of business, you would still hold the stocks in those portfolios.
Right, so there you go. So that's the key. Vanguard is not a basket.
No.
The securities, each of those are individual baskets. If you put all your money into Amazon, hint, hint, hint for everyone playing the game,
yes.
Then you would have all your eggs in one basket. But if you put your money with Vanguard, you'd have your money in lots and lots of
hundreds
baskets.
And thousands of
Thousands of baskets.
So no, Vanguard would be a very good place to hold your IRA, to hold your inheritance money, all of those things. Again, then you got to start boiling it down to how much in the riskier things like stocks and bonds and that sort of thing. But if you're, and by the way, this is a problem. We talk about this, seems like every week, because when we meet with people, they bring in all these disparate, I got a statement from Fidelity, I got this money over here. It gets confusing. So having it at one custodian, which is what Vanguard would be very helpful to you and the other people in your family figuring out exactly what you own. And Vanguard's very low cost, too. That's the other reason we like them.
Yeah, low cost. And the other nice thing about it is if you have them all together in that one place and you decide that, hey, I want to move some of this regular IRA over into a Roth, it just makes it really easy to do it. It makes it so easy. So
does that
just
help?
Makes life a lot easier. Does that help, Catherine?
Yes, it does. Thanks very much.
You're very welcome. Hang on the line for a minute so we can get information to send you
Real
our
investing
special
journal.
Calendar. No, calendar.
I tell you what, they gave me the shot this morning, but it didn't help. So I'm going to go get another one, I guess.
It's been years, and it hasn't done a thing.
I keep taking the pills, but the result is the same. Dang it.
The game goes on.
Yes.
Speculating. Is it speculating?
All right, can we answer the one that we got on the table?
The question is Amazon at $1.50 a speculation or an investment? Tom, you ask the question. I'm going to give you my answer.
Okay.
That is abject speculation, in my opinion.
Why?
Because you can lose, you could have lost, and still could lose everything. You could. I don't care what your time frame is.
What you're saying is it's speculative if you could put it in something and you could lose all your principal.
And it can go to zero. To me, that is a gamble by any definition.
So by that definition, then you can't, when you put it in the stock market, you can't lose it all?
Correct.
Unless it's an asteroid or something.
Right. And in that case, if the loss entails everybody dying on the planet, then nobody cares.
Your IRA, custodian's not going to be that important.
Let's say if it involves a loss that you are likely to not be aware of, it's an investment.
We'll continue talking about speculating versus investing. Let us help you.
877-397-5666.
Tom and Don are talking real money.
Our lunch ed classes that we've talked about occasionally during the show have been so popular that we're now expanding them to our offices in Portland and Phoenix, and we are going to start doing them online too. Well, you won't get the lunch if you do it online. you will get a great education, and you can go out and grab lunch and join us for Lunch Ed. Just sign up at TalkingRealMoney.com. That's TalkingRealMoney.com. There is a very small fee, just $5, but for that, you get a worksheet and you get access to some special offers, so it's worth it. Sign up now at TalkingRealMoney.com, TalkingRealMoney.com, and get a real investing education. That's TalkingRealMoney.com. Now back to the show.
For your real life and real future, Tom and Don are talking real money.
Because it's really important to your real future, and we want you to enjoy a really great future, so we want you to understand the difference between investing or speculating.
And by the way, sometimes when you speculate, you get lucky. And it pays off.
Oh, gee. Huh.
I knew you were going to like that one.
Isn't that the definition of playing the lottery, going to a casino, playing the ponies?
And if you give the phone number, and I'll ask you another. Ask you another potential speculating versus investing one.
All right, and you're invited. You're invited to ask questions too on show. You are all invited. We would love you to speak with us today. 877.
Bring your own vodka.
If I mispronounce something, I'm just going to turn it into an accent.
Right there.
877-397-5666, because then it doesn't seem like I made a mistake.
Good point.
Then it just seems like I was going into a character. 877-397-5666. If you participate in speculating or investing,
my family has owned land in a remote part of the county in which we live for many years. We're holding on to that.
In case they expand the prison.
I hadn't thought that one. I was thinking more like something more pedestrian, like a highway or something. But
you live in the prison county.
That's true. But this comes up. That's another one that seems to come beyond the one stock home run thing. The other one seems to be that we've got this property and this is an investment. Is it an investment?
Yeah. Well, guys, your great granddad is sitting there going, "And not making any more land. Dang it.
Yep.
You're not making any more land."
That's not true, by the way, because I just came back from Hawaii, and they are making more land there. So
they are.
Yes, they are.
They are. As the West Coast is losing some.
That's
so
good point.
Maybe it's a net.
All right, so answer the question. Is that speculating or is that investing?
I thought we were playing a game.
Oh,
all
okay.
right.
So I'm just asking you.
Okay, so I'm buying a piece of land out on the periphery.
Mm-hmm.
Now, my former father-in-law used to do this. Didn't work. Bought like farmland in Wisconsin, thinking that Illinois is going to eventually expand into Wisconsin.
You run out of room in Chicago, you'll get there.
No.
Still waiting.
This is an outright speculation. Ain't no doubt about it. The only way this could kind of become an investment, is if you were running it as an investment. You were operating it in some way that it generated income, a positive cash flow, and had appreciation potential. Yeah, because, again, losing everything in land, if it's paid for, there's no note on it, very difficult to lose everything in a piece of land.
By the way, there's another way it can work, too. Because it did for Lyndon.
Oil, finding
oil.
Oh, wait, no, that's back in speculation.
Lyndon Johnson and his friends. They bought some land near what became a highway.
So obscure.
That's not obscure. That's merely like 50 years ago.
That's obscure.
You need something to last 10 or 12 months.
Or
years.
10 or 12 years, yeah.
No, my point is,
Lyndon
however.
Baines Johnson. Do you know how many people don't know? Do you know how many people listening probably go, "Who's Lyndon Johnson?"
Oh, come on.
Oh, seriously.
Then you need to read up. But at any rate, he and his friends bought certain land that he knew was going to become a very large highway.
All right. That, again, is not really investing.
No, that's what I was getting to.
That's cheating.
No, I agree.
Okay, is it investing, speculating,
or
cheating? Cheating.
Fair enough.
That would be cheating. And by the way, let's just real estate, just in general.
Yes.
My opinion of real estate is that it is, generally speaking, not a very great investment.
Well,
generally speaking.
and then you got to differentiate. Are you talking residential or are you talking commercial?
Talking about individual pieces. When you're buying individual pieces. Now, if you're buying a portfolio of real estate, sure,
that's been productive.
You can, in aggregate, have a decent return because it's managed as an investment. It's managed to both generate income and some future gains. But like your house, not a great investment. 877-397-5666.
Tom and Don are talking real money.
Here's another brief interruption. I am surprised at how much people still love their magazines, their print magazines. The vast majority of the most popular magazines on the planet have millions of print subscribers and only a few 100,000 online subscribers. I learned people like reading on paper, and because of that, I've decided to create a brand new magazine for real investors to help you become a real investor. It's called Real Investing Journal, and it's full of just that, real investing information, the science of investing, the proven ways to make money long-term without gambling. There's no business news. There's nothing about speculating. There's no lifestyle stuff. It is all about investing all the time. It's a full-color magazine. It's printed every quarter, and it's going to cost $25 a year is all. That's all, $25 a year. But here's the deal. If you become one of our charter subscribers, we'll lock in $15 a year, and while supplies last, you'll get the very first issue in addition to your next year. That's a deal. $15 a year, and if you don't like it, I'll give you your money back. That simple. So go right now to realinvestingjournal.com/subscribe. You need to add that /subscribe. realinvestingjournal.com/subscribe and sign up for the charter subscription rate of only $15. You save $10 and you lock it in, and you get an extra issue. And you need to do it now because I know we're going to run out of the extra issues, so you better hurry. Go to realinvestingjournal.com/subscribe. realinvestingjournal.com/subscribe. You'll like it or your money back. And speaking of back, we're going back to the show now.
Reality radio for a really great future. We're talking real money.
As you scurry about spending money, well, why don't you get a little help saving it and maybe even investing it here on Talking Real Money, the only program of which I'm aware that is 100% devoted to making you a real investor, not a speculator. Speculating versus investing. Come play along. Which is it? We'd like to hear your investing versus speculating questions at 877-397-5666, and we have some prizes for you.
Yeah, I mean, if you call, you get a mag. You get the mag.
No,
you get a calendar.
calendar.
I was correcting myself. A 2017. This is, and by the way, here's what I love. It's not one of those, as you pointed out, cheap little ones with your name on it, our name on it. Pardon me. This is a big calendar. You can write. The thing I like the most was the reason that you picked this particular design. You being Don, that it has all this room. You can write all the daily stuff, all the daily stuff on there. No, I love it. So I always put the stuff. Got to do this tomorrow.
It has
tomorrow.
two sections. It has the event section and the daily personal stuff.
The only thing I don't like about it, the only thing it has no historical dates of significance from World War II on it. I keep waiting every year. This happened in 1940. Not there. So it's kind of upsetting.
See, when it came, you were the only one who ever expressed an interest in that on the entire planet, and therefore I thought, well, since he knows those dates better than I do. Why bother?
That's right. You're right. Okay.
Letting it go. I'll call Tom on a Tuesday in July, and he'll go, what happened on this date in 1942? Yeah. I don't know. He'll go, Goering stubbed his toe while boarding a Luftwaffe.
And that led, by the way, that is a significant moment because that led to his change of strategy in England. We could get into all that, but we're not going to. So that was a big day. I can't believe you're mocking me for that one. Others, yes, but that was a huge day. Really?
Yeah.
big.
Well, but Goebbels and the puddle. Come on, that was it wasn't that deep. It was like 6 inches. He wasn't going to drown. There was no threat to his life. He overreacted,
as I am known to do as well.
He was known to do that.
All right. Should we go back to the
phones? Then I read today in the Wall Street Journal.
Yes.
In a minute. Then I read today in the Wall Street Journal that Hitler was on coke and oxycodone?
Oh, yeah. Well, he's long. I don't know why they make such a big deal. There's several books talk about his drug use. This is not something new.
But wow, coke and oxycodone. No wonder he was nuts.
It doesn't help.
That's not good for you. 877-397-5666 is our phone number. Wow, we've gone from Christmas shopping to Hitler. How did we get there?
I blame
Judy,
myself.
You're up next. It's your fault. Judy, welcome to Talking Real Money.
Thank you.
Thanks for calling. What can we do for you?
I was wondering, I don't know if this is along your subject line, but could you comment about investing with Primerica? I can't find out anything much about that company, and I'm just
Wait a minute.
concerned.
Well, let's step back at the big picture.
Are people still investing with Primerica?
Yeah, they are. But I mean, okay, but let's just talk. Let's unpack this from the 30,000-foot view before we get into Primerica specifically.
Primerica.
Thank you. So, in the world of investing, we believe that you should, number one, base a strategy that has been vetted, considered, written about, studied by a group of academics. The insurance industry does not. Number two, the insurance industry is in the business.
Primerica sells insurance and mutual funds.
Well, but I'm getting to that. Number two, the area they specialize in is insurance. I have insurance. Don has insurance, and so there's no reason not to use them for that. But if you woke up in the morning and said, who am I going to pick to build a great portfolio for me, it wouldn't be Mutual of Omaha. It would not be Farmers. That's not their area of specialty. The reason they do it is obvious, because because you walk in the door buying auto insurance and they say, by the way, lady, do you have an IRA? Do you have this? And you say,
no,
I don't.
Okay, here's the deal with Primerica. Primerica sells their pitches, buy term, invest the rest in their mutual funds. That's their pitch. That's all their pitch.
You want to hang on? We'll talk to her a little more about it.
Primerica is not one of the more honorable firms in America, in my opinion, and I've dealt with them for over 25 years in one manner or another and done a lot of research. So, Judy, since this is a pretty important topic, not just to you, but to other people who might get caught up in this, stick around. We'll be back.
Tom and Don are talking real money.
I discovered something really interesting not too long ago. It's the fact that people still like getting printed magazines. I read most stuff online, but the vast majority of subscribers to almost every publication known to mankind subscribe to the print edition. I didn't realize. I'm sorry. So I've decided to correct my mistake, and I have created a brand new magazine, the only one that I know of that is totally devoted to real investing. It's called, aptly enough, Real Investing Journal. Real Investing Journal comes out every single quarter. Real Investing Journal is not about speculating. It is not about business. It is not about lifestyles. It is not about politics or other news. It is strictly about the process of building wealth by becoming a real, disciplined, scientific-based investor. And it comes out every single quarter, and you have an opportunity to get it for a lot less money and to lock that price in as a charter subscriber. Annual subscriptions are going to run $25, but if you subscribe soon, you'll be one of the charter subscribers who not only gets it for $15 a year locked in, but you'll also get the very first issue of Real Investing Journal as a bonus while supplies last. So here's how you subscribe. It's really easy. Go to realinvestingjournal.com/subscribe. realinvestingjournal.com/subscribe. And then what do? You subscribe. Then we'll start mailing it to you. And if you don't enjoy it, I'll give you money back. What do you have to lose? You got nothing to lose. So go to realinvestingjournal.com/subscribe, become a charter subscriber to Real Investing Journal, and I guarantee you've never seen a publication quite like this, because nobody that I can find focuses on the truth about investing, except, well, of course, now Real Investing Journal. So go to realinvestingjournal.com/subscribe, realinvestingjournal.com/subscribe, and I know I said that a lot, but I want you to remember it. And now back to the show.
Your guides to a really great financial future. Tom and Don are talking real money.
Hello again, and welcome back to our little get-together where we try to make money make sense and try to help people end up with more in their pockets and put less in the pockets of a lot of other people who are less than scrutable. As in inscrutable. As in inscrutable. And we are now, by the way, our phone number is 877-397-5666, and we're talking to Judy about one of the, it used to be, boy, Judy, back in the day when I was on all over the country, this was one of the most popular topics on the show, was Primerica. They came up all the time.
How
so
come?
I know a lot about Primerica.
Why is
a lot
that?
of people called because, Judy, are you looking at them as a place to invest or a place to work?
No, well, I can online. It seems like they have a lot of disgruntled agents, but I find that it's a multi-level marketing, and that scares me.
Yeah,
it is. As a matter of fact,
get any comments. I don't.
Well,
investors do not make comments online, so I don't know who to go to.
Okay, Primerica is not a very honorable firm, in my opinion. It is, in fact, multi-level marketing. It is the Amway or Herbalife of financial services. They sell what anyone in the insurance industry will tell you is some of the more expensive term life you're ever going to get your hands on. And let's just talk about some of the facts about the company itself. Every year, Primerica recruits about 250,000 people based on the latest numbers I've seen.
250,000 new people. That's a lot of agents.
And every year, somewhere between 100 and 150,000 drop out.
They get it like a lot of multi-level people get in the program, it doesn't work, and I'm out. Yeah,
right.
Okay.
Like most multi-level programs, the money that is made on average, the people at the top of the pyramid, they make great money.
Yeah.
But the bulk of people are at the bottom of the pyramid. Now, this is figures going to shock you, but this is the last year I have a number for. In 2012, you can look at their annual report, and I haven't looked at one in years because it hasn't come up. But back in 2012, the average amount of money paid per salesperson with Primerica was $5,500.
So here's another way to look at this.
You got a lot of desperate people.
Yeah, so you asked about the investing side. On the investing side, they use actively managed, high-expense commission mutual funds. This goes, as I mentioned earlier, counter to what we believe that we can show the academics would tell you would not be the right approach. Instead, go to a Vanguard, for example. Also, what the number you just pointed out, Don, is the fact that if you do sort of hire an agent to sell you into one of those products,
it
doesn't sound like they're very full-time kind of people. If I'm somebody handing my money, I want right. I mean, they're ready to sell you.
The first person they get who might bite, it's like, oh my gosh, I'm going to quadruple my earnings.
So that wouldn't be the place that we would recommend. And by the way, just again to start at the very high level, I don't use insurance companies for my investments. I use them for insurance.
Yep.
Right.
Yep. And you can find if you go to some of these.
I'm sorry.
I'm sorry.
With Vanguard, you have to kind of invest yourself, or are there brokers that will help you with that?
Well, they do have advisors you could hire if you have a certain amount of money, but investing by yourself at Vanguard is not even all that hard because, as a matter of fact, what you ought to do, you're the perfect candidate, Judy, to come to our class next week. Because we will explain to you how you can invest on your own and even give you some funds at Vanguard you can buy that are going to give you a great diversified portfolio.
Mm-hmm. And we're not selling you anything.
And it only costs $10 and you're going to get lunch.
Okay. Well, I live in Olympia, so it's quite a way.
Oh, well, we're having one in Tacoma.
Oh, okay.
Yeah, it's in Tacoma on Thursday.
To TalkingRealMoney.com.
Go to TalkingRealMoney.com. And if you want to go to sign up at TalkingRealMoney.com, if not, go to TalkingRealMoney.com anyway. We have portfolios there. Lots of great information on how you should invest as an individual investor if you're doing it on your own, or how you find the right people if you're not doing it on your own. And there are a lot of people who are going to do a lot better for you than anybody at Primerica is, in my opinion.
And this, by the way, what she said is so critical because people say, I want to invest, but I don't know anything about this. So should I hire the insurance agent who will say, don't worry, got all your money taken care of, or I got to learn something so I can go to Vanguard and do this on my own. This is the area where the rubber really hits the road here. It's hard. I get it.
But that's the thing. It's not hard.
It's not. But it's hard if you don't know anything. If you know nothing, then it's tricky.
Which is all the more reason why people should get our book, which they have to get through us because it's not for sale.
I forgot the
financial
book offer.
physics is. Well, no, that was for the book offer was for getting into the game, but nobody has yet.
Oh, the speculation
nobody wants
versus
to play
investing.
our game.
Okay.
Nobody wants
As
to play
always,
our game.
Take the ball and go home.
Nobody likes my game.
So no, but I mean,
I
need
invented
some
a new game show.
And by the way, what Don said about the class is, if you come to the class, we give you the mutual funds you could go do on your own at Vanguard, very simply. and at an incredibly low cost. You imagine the cost difference between paying an insurance person 5.75% for the commission, then the funds are, let's just say, be nice and say on average 1% a year.
They're higher than that.
Versus you go to Vanguard, no commission, and the funds average what? 0.3, 0.2, whatever it is. So
0.2.
Yeah,
really more like, for the funds, we'd suggest more like 0.2.
Yeah, so you can see.
So let's run some numbers. Let's say you give $10,000 to your Primerica agent.
Yep.
They put you into one of their mutual funds. That's $575 immediately deducted from your money. It's gone.
Yep.
Forever. Gone. You put that same $10,000 at Vanguard, you will have $10,000 invested. Okay? That's where we start. Then, over the next year, the mutual fund, let's assume they charge you 1% per year. They're going to take $100 out for their fees. Vanguard is going to take out about $20
Yeah,
for
pretty
their
easy
fees.
to do the math.
You win just based on the lower fees. As a matter of fact, the easiest thing you can do to improve your investment returns, the single most effective tool in your arsenal of means by which to select products, is to look at fees.
It is truly the only free lunch you get on Wall Street.
It's an absolute guarantee of a higher return. If you have two identical investments, the one with the higher fee has to make you less money. It has to. So you can then say, well, I may pay more to get a smarter person, but now you've got to believe that there's somebody out there, not just smarter, but somebody out there who knows the future.
Well, they've been smarter and they're going to continue to be smarter.
But they need to actually know the future.
Yeah, that's true. And by the way, how many people knew the future the last month? I'm going to just pretty much say nobody.
Everybody almost universally.
Everybody said Trump's elected, market's going straight down. I mean, remember the election night, the futures were down like 900 points on the Dow. I mean, it was just like,
and then we woke up the next morning, went and looked, and said,
"What happened?
Wait, what?"
Remember, I got up early because I thought we'd have the media, clients call, and then it was no. So, and the market is basically, I showed my wife the chart last night, said, does this look a little scary when it's going like this? And my daughter said, does that mean it might go the other way, Daddy? I said, yeah.
Yeah.
Might be something you pay attention to there.
That's the scarier version of the roller coaster.
Exactly.
But, again, we're not predicting it's going to go. We know it will go down.
Yeah, of course.
That's the one thing we absolutely know. The market will go down. But here's something else that we can tell you with reasonable confidence, and that is it will probably go up more than it goes down, only because it has in the past. 877-397-5666. That's our number.
Tom and Don are talking real money.
If you're one of the many podcast listeners who's asked, how do I attend one of your classes? Well, we've decided to take our very popular Lunch Ed classes that we've been doing at our offices and also do them in the form of a webinar online. At the same time, I'm doing the class live elsewhere. You can sign up for these live Lunch Ed classes right now at TalkingRealMoney.com, TalkingRealMoney.com. We have a limited number of seats available because we have to pay for them, so reserve your place right now. We're going to have classes in the future on a variety of topics, so check them out regularly at TalkingRealMoney.com. It's under the event section. And there is a small fee for these classes, just $5, but you're going to get a great education, not a sales pitch, and a free worksheet and some other perks. So sign up for our next Lunch Ed class right now at TalkingRealMoney.com, TalkingRealMoney.com. And now, more Talking Real Money.
For your real life and real future, Tom and Don are talking real money.
And if you would like to attend that class, we invite you to do it. It's just $10. You'll get lunch, and you can sign up. And you'll get a calendar, too, for a little Christmas gift. So go right now to TalkingRealMoney.com. Sign up for Lunch Ed at TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.
Hi, brief break time. I'm Don, and I really wanted to share this with you because this is something I'm really excited about. I have taken much of the work that we do for our online Real Investing Journal and put it into a quarterly magazine that is, I have to say, pretty good and pretty cheap. And it is the only publication I can find anywhere that is totally devoted to real investing. You will find no business news there. You will find no lifestyle information. You will find no hard news, political news, speculation stuff. It's all about the science and the process and the discipline of real investing, and it's a way to keep you on track toward a better future. It comes out 4 times a year, and it's going to cost most people $25 a year. That's all, just $25 a year. But because it's brand spanking new, a limited number of people can become charter subscribers at the lifetime price of $15 per year. Plus, I'll get you a copy of the very first issue as a bonus while the supplies last, of course. So here's all you need to do. Just go to realinvestingjournal.com/subscribe and subscribe. And you'll start getting it in the mail every quarter. If you're one of the first 200 or so to subscribe, you'll also get the very first issue as a bonus. So be one of the first to get the very first magazine ever about investing and nothing but investing. Real Investing Journal, and you can subscribe right now, really easy, realinvestingjournal.com/subscribe, realinvestingjournal.com/subscribe. Now back to the show.
Reality radio for a really great future. We're talking real money.
'Tis the season to spend money. Wouldn't it be nice if you could make some too?
I was going to say make some more, but okay, that works.
That's what this show is all about.
Yeah.
La, 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 la.
And by the way,
This
little
is
program note, I'm going to say thank you
program
for handling the show next week, as I will be holiday-ing, Christmasing with my family on the other side of the mountain. So, in the snow, and a lot of it,
The
apparently.
Tom went over the mountain.
Maybe you'll get lucky. They'll close the pass before I get back.
Ooh, I hadn't thought of
Yeah,
that.
I don't know.
Yeah.
It happens. It does happen.
Traction tires. You could just, you could just tie your kid's jump rope to the tires or something.
Yeah. So, anyway.
I don't know what that means. Traction.
Now,
I
we're still
I
working
forgot
on
what
Christmas Eve, so.
I have forgotten what all those things were after 20 years of living in Florida. It's like snow
What?
tires?
Yeah, what?
What's a snow tire?
Yeah, exactly. How
Or
would you
all
know?
season tires?
Yeah.
Don't know what those are either. I just have tires.
Exactly.
They drive on the road. They roll like a tire, and nothing ever slips.
So you're out there driving around spending money, and we're here to try to help you make more, keep more, kind of get it right, if you will, in some ways.
Build a future.
Yeah, build a future.
Build a future.
And I know you hate me for this. But
What?
again, the week between Christmas and New Year's, you should find a few days to work on a plan. It's the best time I know.
It's so boring.
I know, because you don't want me
That's
to mention
so
on the show, but
boring.
it's a
no,
good,
it's just so boring.
It's a good
I cannot
resolution.
think of a better way to get listeners to
That was it.
turn to another station
Oh, you're
than to
killing me.
tell them they've got
All
to
right.
create a plan.
And by the way, later in the show, we'll give you the one stock you must own in 2017.
I didn't see that in any of the show prep.
But you told me to give something that would keep people tuned in, so I'm going to give you the one stock later in the show you must own in 2017.
Oh no, the show's gone
by the
right
way,
down
by the way,
Hill.
there'll be another 12,999 stocks you got to own too.
Oh, okay. So you're going to list
Better.
well, now that wouldn't make for an interest. That's what we'll do on Christmas Eve.
Oh, we'll just start going through. Okay,
Because
Alphabet,
no one's
Amazon.
gonna call
We'll just
anyway.
Start with the A's and work our way through.
So let's list the 12,000 stocks you must own now. It's about 12,000, right?
We could, if we hustle, we probably could get through that in 2 hours.
Get it in 2 hours?
It'd be tight, but
Would be a strange show.
Boeing, Boxcar.
We could
Yeah.
do some interesting musical interludes to go with it.
Let's just not.
All right, what we're doing today,
Yes.
if you want to participate, you have a dual prize opportunity. If there is something in your life and you're not sure whether it's speculation or investing, is it speculating or is it investing? Call us and participate in the Is It Speculating or Is It Investing game show, and you will take home these exciting prizes. Tom, tell them what they'll win.
Well, I mean, just for calling and being on the show, you get the calendar, 2017 Don McDonald's bathing suit calendar, which is great.
I look so good in a Speedo.
It's amazing. And also the book. You get a great book about real investing.
Yeah, it's
white and it's beautiful. And
it's
you can
white
give it
and it's beautiful.
And
it has these great little portraits of Tom and I on the cover.
Oh, I forgot about that part. It's kind of hard on the beauty there, but okay, we'll go along with it.
So you'll get those. And here's the phone number for you.
Yes.
877-397-5666. That's 877-397-5666. And you can call with other stuff, too. If you call with other stuff, you just get the calendar. But if you call with speculating versus investing, you get both.
So you call us with any question, but if you call and say, I'm thinking
of
buying this.
Is this speculating or investing?
Okay, yeah.
Or I already own it.
Right.
Is it speculating or
Fair
investing?
enough. Yeah.
I think that's really simple.
I'm going to tell you right now, about 99% of the stuff that people think is investing is
Don't
speculating.
give it away. No, you're spoiling the whole game.
That was it, huh? Okay, time's up.
He ruins all the fun. He probably tells his family what the presents are, or he's under there shaking them. What is this? Oh yeah, I know what this is. I hate it. My kids used to do that. They would get it right. We'll be right back.
Tom and Don are talking real money.
Yes, it's time for another one of those inevitable interruptions that go with this being a podcast from a live radio show on commercial radio. This one is about something you're going to really enjoy, though, and something from which you could derive a lot of benefit, and that is the fact that we are now bringing our live lunch ed classes to the internet so that you, along with the folks at our offices in Seattle and Phoenix and Portland, can actually attend the event. You just won't get lunch. You're going to have to go get your own. But you'll still get the same great education, and you get a free worksheet, and you get some other perks that go along with the class. Tickets are only $5. That's it, just $5, and you can get them right now at TalkingRealMoney.com. TalkingRealMoney.com. I guarantee that you're going to get a great education, and if you don't feel you did, let me know. I'll give you your money back. It's really just that easy. So sign up for one of our upcoming lunch ed classes today. Don't put it off because somebody might take your seat. Go to TalkingRealMoney.com, TalkingRealMoney.com. It's under the events section of the site, and I hope you'll attend one of the upcoming classes. And now, please continue listening to our program.
Your guides to a really great financial future. Tom and Don are talking real money.
I just scared myself. I did. I just scared myself. You know Don Phillips is?
Uh-huh.
He started Morningstar.
Mm-hmm. Yeah,
he founded it about 30 years ago.
He's still involved, I think, isn't he?
Oh, yeah. He started about 30 years ago, and I was a big early advocate of Morningstar. I used to have their big binders on my desk.
And for those of you who don't know Mornings, this is a website where you can go basically type in any fund ticker.
Yeah, or
mutual
stock
fund
or
stock,
ETF.
and it'll tell you about that.
Tell you all about it.
Yeah, it's great.
I used to have binders of the Morningstar because it was all in print.
Yeah. Oh, then
this was pre-internet. This was pre-internet.
You had to turn the pages, yes.
And I've interviewed Don Phillips on my show years ago.
Yeah.
And, I had pictures of him. I know what he looks like. Mm-hmm. And I was just on Morningstar's website during the break, and I looked over. There's a story about the evolution of the fund industry, an interview with Don Phillips, and I went, whoa, he looks really old. And then I looked in the mirror.
Ouch.
I scared myself.
I got it now.
877-397-5666 is our phone number. We are all about your money and making more of it for you and helping you build a better future. And we want to start doing that right now with Natalie. Natalie, welcome to the show.
Thank you.
Hey.
I have a question about a 401k. We have a Vanguard 401k at work. And a couple years ago, they added the option of Roth inside of it. And I'm wondering, how do you determine when or if you should take advantage of that?
How old are you, Natalie?
I am 51.
51, okay. And
a mere babe.
Yes, you're very young. As I tell Don, because Don was just talking about how old he is.
And
my
you're younger
suggestion
than I
to
am,
you,
I know, yeah.
savor every holiday moment, Don, because they may be among your last. No, kidding. So that hurts. So here's the way I look at all this. Here's what you need to think about. It's about how much taxes you're paying today or how much tax you're going to pay later. So I personally think every dollar you can afford to put in the Roth instead of the regular 401k that's not going to severely impact your overall tax situation, you should be doing it, because remember, that's money that's going to come out tax-free and grow tax-free.
And can sit there forever if need be.
And so here's an idea. Maybe just split it up. Put half in the regular 401k and half in the Roth.
Here's my thinking. And we'll have a slightly different opinion. Not a big difference, but a slightly different opinion. I believe that those who are good savers and good investors, people who regularly save and regularly invest, are likely to have enough money in retirement that their retirement tax bracket is unlikely to be lower than their current tax bracket. And in that case, it is almost always beneficial to go with a Roth if you think your future bracket might be higher than your current bracket.
We're completely on the same page there. So that's something that's hard for people sometimes to differentiate.
If you don't need the deduction, I'd be all Roth all the time.
Yeah. How severely would it impact your tax situation if you, instead of taking the money out pre-tax, took it out post-tax? Any idea, Natalie?
Well, I assumed, like you said, that I would be in a lot lower tax bracket later when I'm withdrawing it. We're in a high one now, but it may continue to be high.
So here's another, again, the simple approach, just split it up.
Split it. Okay.
Put half in the pre-tax and half in the Roth.
And then that gives you options. It gives you a little bit of a deduction today, but it also gives you an option to have money that you can put into a Roth IRA that doesn't have to be subject to the RMDs down the road, which could hurt your tax situation down the road. So you get more options that way. Good advice, Tom.
All right, Natalie. Happy holidays. Natalie. Enjoy the calendar.
Yep. Get around hold.
Thank you very much.
Thank you. And RMDs, you little jargon monster. Required minimum distributions. And we're going to start talking RPOs here pretty soon, too. So, you know what RPO? Do you know what that are? You don't even know that. You're a football guy. Run, pass, option. Come on.
Run, pass, option.
There you go.
The pros don't play that very often, do they?
No, not very often.
Very often.
You got a guy here in Seattle that does it a little bit, though. Named Russell Wilson.
Oh, Russell Wilson. Yeah, he is one who does that once in a while. Yeah. Okay. I just there was a team last week that Denver played that did that once in a while, really ineffectively. really ineffectively. Chris, you're up next. Welcome to Talking Real Money.
Hey, Chris.
Hi.
What's up, Chris?
Can you hear me?
Yes, we hear you fine. Go ahead.
I work for Boeing, and I just recently found out that I can take money out of their VIP program that I put in post-tax and roll that over into a Roth. So I moved it over to Vanguard. Now the question is, what should I put it in?
Here's an idea. How big are we talking? How much money, roughly?
About $90,000.
Again,
hold on.
Here's my advice.
You better ask him though some questions.
I know, because otherwise I would put it in one fund that's all in stocks.
But
it's going to go up and down a lot.
A lot.
Yeah, it's a lot of volatility. How old are you, Chris?
50.
How long until you need the money?
Probably about 12 to 15 years.
Let me ask you the big question.
Yeah.
Ready for the big question?
There you go.
Okay, Chris. You have $100,000 in the account at Vanguard. At some point in the future that no one will ever be able to predict in advance, the value of that account drops to $50,000, and you have no idea what's going to happen from that point forward. No idea, except the rest of the world says this is the end of the world as we know it. The Great Depression is coming, like we've seen in the news for many years.
Pretty recently, 2008.
What do you do?
Yeah, do you, A, take the money and move it to something
to money
safer,
market and wait for things to get better?
Or B, do you say, that's just part of the process, stocks go up and down, and I'm going to let it ride?
Let it ride.
All right, Tom, you can give your answer now.
Thank you.
All
This
I
is
just
making
wanted
my
to
holiday.
protect you. I'm
All right.
acting as
I
your
appreciate
attorney
that.
today.
You ready to
trying
write? You ready to write down a ticker?
a ticker?
Well,
Jargon.
Okay. What do you
Symbol?
call it? Symbol. Thank you. V is in victory. T is in Tom. W. I don't know the.
Yeah, WSX.
I know, but I don't know the
World.
World. S as in Sam. X as in xenophobic. I guess it's actually X-ray. VTWSX. That is a Vanguard fund that holds most of the world's stocks.
6,000 to 7,000
I forget what
stocks.
the expense ratio. The ratio is tiny.
And
You can put it all in there, and it's going to go like a roller coaster. But hopefully, in the next 15 years, you could make double digits. Hopefully.
Hopefully.
And here's the other part. Here's the great part.
0.25. The
It's
expenses.
ridiculously cheap. And here's the other great part. Then you make double digits, hopefully, and you get to take it out and pay no taxes on it. Wow. Talk about your great advantage. That's what I would do if it was my money. VTWSX. And you're going to have to close your eyes and hold your ears from time to time, maybe
no
your nose,
kidding.
because it's
It
going to have a
hurts.
wild ride.
Wow.
But that's part of
They're
it.
up to 7,500 stocks in that portfolio.
That's
diversification.
It is indeed.
That is diversification.
Great question, Chris. Happy holidays.
Yeah,
Enjoy the
happy
calendar.
Holidays. Wow, 7,500 stocks. And what do you guess their turnover is? How many times do they turn it over? 7%.
Wow.
That's all.
Yeah.
7%.
It's a
They
great
don't
fund.
sell stocks very often. That is
Really
a
good
good fund.
fund, yeah.
877-397-5666. Give us a call. We've still got time. Lots of important stuff to talk about.
Tom and Don are talking real money.
Here's another brief interruption. I am surprised at how much people still love their magazines, their print magazines. The vast majority of the most popular magazines on the planet have millions of print subscribers and only a few 100,000 online subscribers. I learned people like reading on paper, and because of that, I've decided to create a brand new magazine for real investors to help you become a real investor. It's called Real Investing Journal, and it's full of just that, real investing information, the science of investing, the proven ways to make money long-term without gambling. There's no business news. There's nothing about speculating. There's no lifestyle stuff. It is all about investing all the time. It's full color magazine. It's printed every quarter, and it's going to cost $25 a year is all. That's all, $25 a year. But here's the deal. If you become one of our charter subscribers, we'll lock in $15 a year, and while supplies last, you'll get the very first issue in addition to your next year. That's a deal. $15 a year, and if you don't like it, I'll give you your money back. That simple. So go right now to realinvestingjournal.com/subscribe. You need to add that /subscribe. realinvestingjournal.com/subscribe and sign up for the charter subscription rate of only $15. You save $10 and you lock it in, and you get an extra issue. And you need to do it now because I know we're going to run out of the extra issues, so you better hurry. Go to realinvestingjournal.com/subscribe. realinvestingjournal.com/subscribe. You'll like it or your money back. And speaking of back, we're going back to the show now.
For your real life and real future, Tom and Don are talking real money.
And what is currently the third largest holding in VTWSX, Vanguard Total World Stock Index Fund?
I'm going to go with Amazon.
Nope, Secretary of State Corporation. Secretary of State Corp.
Is that Mitt Romney's fund or something?
No,
I
you
don't
don't
know.
know.
I don't know that one.
The CEO of ExxonMobil, they're saying he's going to be nominated for Secretary of State.
They've had a new rumor every 10
Secretary
minutes.
of State Incorporated.
Wait till
it's my new name.
4 o'clock. Love a new one. They had Alan Mulally they were throwing around. All kinds of names out there. Give me a break.
877-397-5666 is our phone number. And Eric, you're next. Welcome to Talking Real Money.
Hey, guys. I got a question for you. Speculating or investing?
Ooh, good.
Oh, good.
Nice.
We're playing the game.
All right, here we go.
All right, go.
Right. Okay. Selling some of my large cap index funds and extended market index fund to capture some gains and put it into a bond fund.
Oh, come on.
Wait.
Too easy.
To capture gains? I've heard of people.
No, he's rebalancing.
Rebalancing, yeah.
That's
Okay.
capturing. You're taking money off the table and you're putting it in your pocket.
So you're selling stuff that's gone up.
Yeah, right.
And you're buying
That's
stuff
right,
that's
yep.
gone down. But are you maintaining the same balance between equities and bonds that you had prior?
Or is this a market
are you
timing
changing
move?
the balance? Yes.
It's a great question. It's a mix of both. I'm actually gliding our asset allocation up to 25%.
you're glide pathing.
Okay, that's good. Yeah. That would
how
be,
old are you?
So I'm 41.
Okay, so you're glide pathing to 25 in bonds.
That's right.
75-25.
So this is by definition a disciplined, planned portfolio rebalancing approach. So it absolutely becomes, Tom,
well done,
investing.
Yeah. And Bess, we're going to send you a book for asking a question. So is that a good strategy? Absolutely, because what you're doing is you're taking some of the things that have gone up, you're putting them in a way in something safer that won't have as much volatility. And you should, by the way, every person, again, something we run into a lot. People oftentimes build the right portfolio, but then things, as they're going to do this year, get out of sync, right? Smaller companies have gone way up, small value have gone way up, and other parts have not gone up. You should be selling off those parts, as Eric just pointed out, and putting them in the things that went down. It's a very counterintuitive and oftentimes painful experience,
thing to do,
but it is the absolute right thing to do.
No gambling involved, Eric. Thank you so much.
That's great. So we'll be calling you we'll be getting you the magazine and the book.
No, the calendar and the book.
I don't know why that magazine is just...
Somebody needs to slap you upside the head.
I think that may have happened too many times.
The new magazine, though, maybe you're excited because the new Real Investing Journal is in the mail now. It's in the mail.
So I could rush
It'll be
home
arriving
today
in
and
mailboxes any minute now.
Eric, that was a really great question.
Thanks, Eric. That was
congratulations.
Great. I'm so glad we got to award a prize.
Yeah, I know. So there you go. That's how easy it all was. That is not speculating. That is investing. That is a process-driven
discipline.
That's the word I'm
process.
looking for. Yeah, thank you.
It is you can almost do anything you want to a portfolio as long as there is a discipline and a schedule involved. You're
mechanical.
It's mechanical.
Yeah,
that is a great word for it.
It is because
Make
it's not
mechanical.
It's not because I feel this way. That's speculation. Because I feel this is what's going to happen in the next 6 months. This is
there you go.
simply
that's
that
another
went up too high. Yeah.
Another good qualifier we can put on speculation is that if feelings are involved, it's probably speculation.
No, I think it has to be in a way because I'm hoping this is going to happen. I feel like this has got to, that would be my take. So,
all right. So Bloomberg, Washington Post, USA Today, NBC News all say that Rex Tillerson is going to be the Secretary of State.
I don't even know who that. You said that he's the head of what?
CEO of Exxon. He's the CEO of Exxon.
Sakes. He is really. I mean, this is the Billionaires Boys Club. I mean, he's really built the
State Incorporated.
Wow. Must have $1 billion to enter.
Gotta be good for Exxon's bottom line, though.
Gotta
be good for it. 877-397-5666 is the phone number. But if you go out and buy Exxon right now, based on that would be investing or speculating.
That's
speculating.
Easy. Yeah.
Thank you. See, I knew I could tie all those together.
Tom and Don are talking real money.
Let me just take a second to share something new with you. We're going to start doing our lunch ed classes that we do at our offices in Phoenix and Portland and Seattle. We're going to start doing them online as a webinar at the same time. So you can attend too. You just won't get lunch. You'll have to go get lunch. But it's also cheaper. It's only $5 a ticket, and you get a full-color worksheet and some special perks. So sign up for our upcoming lunch ed classes right now at TalkingRealMoney.com, TalkingRealMoney.com. It's under the events section. And you will get a real investing education on a variety of topics. So go to TalkingRealMoney.com, TalkingRealMoney.com.
Radio for a really great future. We're talking real money.
If you're looking for real investing advice, you've come to the right place. If you're looking for fake investing advice, speculating advice, trading advice, timing advice, if you think you're going to get rich quickly, then you're listening to the wrong show. This is not the one.
I said that once in a class in
Phoenix,
Arizona.
There are thousands of other ones.
In one of those money show type classes, I said that at the beginning. I came in and said, if you're here for the hot stock, the hot sector, whatever, then you're and literally about a quarter of the people got up and walked out.
Left. Yeah.
That's what I want. You can't have it. Sorry.
I thought this was a rubber plantation partnership.
Yeah, whatever they're selling now. Yeah. So
llamas. I want me some llamas.
What was the one that the last time you were at that? They had some weird some other.
It was rubber.
Oh,
it was a rubber plantation limited partnership.
Yeah, makes sense.
At that financial thing in Phoenix.
That's right. That was where I did that, and literally a third of the people got up and said, "No, I'm out."
If we can figure out how to do it. We're going to usurp that with Retire Meet in Phoenix. If we can
love to do
out.
that. All right, we got a lot of people
877-397-5666 is our telephone number. And Alice, you're up next on our show. Thanks for being a part of it.
Hi. I have the Vanguard Total Stock Market Index. And, you have talked about the Vanguard World Index. And then I want to ask about the Vanguard International Index. But the reason I'm asking is I have this mutual fund that was bought out by Franklin Templeton. So I didn't pay a load, but now, of course, it has a load. Can I tell you what it is?
Sure.
Yes,
go ahead.
Okay.
Oh, I'd love you to tell me what it is. I look forward to moments like this.
Do you want the name or the ticker symbol?
Give me the ticker symbol first. That'll make it faster.
It says it's, MDISX.
MDISX.
The Franklin Mutual Global Discovery Fund Class Z.
Yeah.
God, and what are they going to do now that they're running out of letters? What are they going to come up with for class shares?
Z shares are a converted share.
Next year it'll be double A, double B. It's ridiculous.
She doesn't get the load, but it's a 1% per year fund.
Yeah.
That's
the amount they're charging you every year for the manager, the accountants, et cetera.
Which is 4 times
what you're paying.
What Vanguard charges for a similar fund, but
this is the part is there anything else in your life where you say, okay, I'll pay 4 times as much for that than I would? No, you wouldn't pay that for gas, rarely for a meal, all that. Anyway, that's
and if you owned a combination of the Vanguard Total Index and Total International, which is
Total
the
Stock
World
and
Fund.
Total International is basically the VTWSX, which is just one fund that owns all those things.
You would own 7,500 stocks around the planet. This Franklin Mutual Global Discovery Fund Class Z owns 103 stocks around the world. 103.
So guess which one, Alice, is more speculative or more investing?
Yeah.
Well, the one that I own would be the more speculative.
It has to be because it only holds 100. Because if something goes wrong with 5 of those companies, it's going to have far greater impact if you own those same 5 companies out of 75 at Vanguard. But this is one of the concepts people. So again, if you held, because I think one of your questions was, look, I hold the Vanguard Total Stock Market Index, and I'm aware of the Vanguard Total Stock International. You could own those 2 funds, and that's just fine instead of owning the VTWSX. So nothing wrong with that at all. Would
the thing for me to do be to sell the Franklin one?
Yes.
That wasn't a Franklin when I first got it.
Is this in a qualified account?
No. I know that it is.
We don't want you to pay a lot of taxes.
Have you made a lot of money on it?
I have to really look into it. I don't pay.
Should be easy
attention.
to find out.
Here's what I would do. If you do have gains, sell a portion of it this year.
Yeah, still got time.
Now in December, and then sell a portion of it in January, and spread your taxable gain over a couple of years. And that way you're out of it, but you don't get hit all at once.
Bingo.
And it doesn't change your bracket all at once either. Thanks for the call, Alice. We appreciate it. 877-397-5666 is our phone number. We'd love to hear from you before we wrap things up on this Saturday.
Tom and Don are talking real money.
Our lunch ed classes that we've talked about occasionally during the show have been so popular that we're now expanding them to our offices in Portland and Phoenix, and we are going to start doing them online too. Well, you won't get the lunch if you do it online. You will get a great education, and you can go out and grab lunch and join us for Lunch Ed. Just sign up at TalkingRealMoney.com. That's TalkingRealMoney.com. There is a very small fee, just $5, but for that, you get a worksheet, and you get access to some special offers, so it's worth it. Sign up now at TalkingRealMoney.com, TalkingRealMoney.com, and get a real investing education. That's TalkingRealMoney.com. Now back to the show.
Your guides to a really great financial future. Tom and Don are talking real money.
And by real money, we mean a really good future. We want you to enjoy your future and have all the money you need. And to do that, you have to become a real investor. So give us a call Saturdays at noon Pacific, 3 p.m. Eastern at 877-397-5666.
And you get a free copy of the great 2017 calendar put together by his truly, Don McDonald. Great calendar.
Thank you.
Great calendar.
Thank you, ladies and
So, yeah, all you do is call, and then we'll call you, get your address, and send it on over. And what? We won't call you and sell you any insurance or any mutual funds or any of that stuff. You just get the calendar.
No, you don't get a sales pitch.
Sorry.
If you were going to get a sales pitch, don't you think you would have gotten a sales pitch throughout the show?
Exactly.
Think about it for a minute.
Exactly. Call us Monday. Call us Monday. We'll fix you up.
John, quick, stop Tom. You're up next. Welcome to the show.
Hey, John.
Thank you. Hello.
Yes, sir.
What's up, John?
I have almost all my money in securities, or in equities rather, and I'm getting scared, and I want to know if there's a way to get that out of there in something safer without taking a huge hit on capital gains. My capital gains are probably 50-60% of what I have.
Why? First, would you want to do that? What are you scared of?
Like you say, the market goes up and it goes down. I'm 79 years old, and I'm not ready for it to go down that much.
Okay,
all right.
So why don't you have a balanced portfolio today? I guess would be the question. Why have you been so equity heavy, if you will?
Because I've done fairly well, and I've tried to avoid taxes.
Well, if there's fear, then fear requires a modification of your portfolio, but not a wholesale change. That becomes dangerous. Making a big wholesale change to your portfolio, this should have been, and hindsight's 20/20, should have been gradually done over the years. But if you're afraid of what the market could do to you, which is up to probably about a 50% loss, and if you're in individual equities, even more scary.
Let me ask you another question. What is your household income going to be in 2016, roughly?
Probably $60,000.
Okay, so you can you can still do a few things where you won't face necessarily the 15% capital gains tax on every dollar that you sell that has a gain in it. I would run that number, and there's a couple places to go do that. But then, again, if I was equity heavy and I've got the money I need to take care of myself for the next 20 years, whatever we all have, I would then have a dollar cost averaging strategy out of it let than because the market's gone up and I'm nervous about what the market could do tomorrow, because you should always be nervous about that.
Let me ask you two really important questions. One, what is the percentage of equities versus fixed income in your portfolio?
Fixed income in the portfolio? There's no fixed income in the portfolio.
None whatsoever. Question number two, what form do these equity investments take?
Individual stocks.
Okay. You need a portfolio that's massively diversified, because what you have right now is a nightmare scenario potentially. Because any individual stock, let's say we have a big downturn, and it doesn't matter what you have, any one or two or three of those companies could go totally bankrupt. Gone. It's happened before. It could happen again. If you have a diversified portfolio, a well-diversified portfolio like we've talked about, like this Vanguard Global Equity Index, you can own equities, but you have 7,500 of them, and 7,500 equities aren't going broke. They're just not. You could do an averaging thing, but I don't think in your case that's going to be beneficial, because when the day comes when this thing takes a beating, and it will, I guarantee that'll happen.
I've written a few of those out.
Good for you.
You're going to regret it. And so what I would take advantage of the fact that you have 2 years here over which to spread it. There is no trick for getting out of paying taxes. You make money, you pay taxes on the money. There's no gimmick that'll get you out of paying taxes, despite what a lot of big
and
folks
even
on
the
Wall Street
rumblings
say.
with the new administration. I haven't heard much talk about getting rid of the capital gains tax, the estate tax. They have said they may dump completely.
I got to tell you, if this was my money, if I was doing this personally, or you were my father and I was advising you, I would advise you to, over the next 2 years, begin the process of, at most 3, liquidating all of those equities, getting them into a very well-balanced index fund that has equities, and then putting a big chunk of that money in a high-quality, short-intermediate government bond fund to let you sleep at night. That's what I would do.
Good advice. All right.
Thank you for your call, John. We really, truly appreciate it. Before we run out of time, Terry, you're up next. Welcome to Talking Real Money.
Hey, Terry.
Hello.
Hey, how you doing?
Terry, what's up?
Hey. Good. Got a question on a defined benefit pension.
Go ahead.
Okay, I worked for a big company for more than 24 years, and I've got this pension. And recently the company contacted me wanting to buy it out.
Of course they do.
For a lump. Right. So in terms of valuing the, say, the net present value of the pension, I was wondering what you would suggest is using for the discount rate.
Wow.
Here's the issue. You're trying to take something that even for actuaries is almost impossible to tabulate.
And there's all kinds of ones that do, by the way.
Yeah.
A lot.
Convert this to a formula that has proven flawed. If it wasn't so flawed, you wouldn't see so many underfunded pensions out there these days, because the numbers that they use didn't work. So therefore, whatever number you use is not likely to be accurate 10 years from today. Here's what the question really boils down to. How much do you believe you will need certainty of income in retirement? If you must have that certain, and you could look at your defined.
And by the way, that turns out to be more emotional generally than financial.
Yep,
Generally.
It's almost all emotional.
Yeah.
That defined benefit plan is reasonably close to a certainty if it's a really large company with a reasonably well-funded pension, and the pension guarantee fund will take care of some of that too. Your risk is low. Your risk is low. When you move it out, you have to take some more risk, but you could end up way ahead of the game. It's a gamble. It becomes a matter of emotion and what is in the best interest of your family. A lot of people will take the path of equal resistance, and that is, I'm going to keep the benefit plan. I'm going to keep the defined benefit plan. It's not a lot of money, but it's something, and I'm going to overinvest in my 401k, my IRAs, and all those other things going forward so that I have two options. So I have that growth option, and then I have that defined benefit option.
Let's see if we can quickly squeeze in one more call, real quick.
Quick, about a minute.
Larry.
Go ahead.
Yep. Larry, what do you got?
Larry, welcome.
Yes, thank you much. Real quick question.
Yes.
You just mentioned the Vanguard fund that was either an international or a global.
Well, yeah, there's one fund that takes in both.
Wait.
VTWSX, Vanguard Total World Stock Index.
Okay. Is there an ETF equivalent?
Yes.
VT.
V is
Two
in
letters.
victory, T is in Tom.
VT. That's the Vanguard Total World Stock Index ETF.
Yep.
Victor Tom ETF, you don't happen to know what the expense ratio is?
Oh, it's small. I don't know. Don's going to have to tell you that one.
In about 10 seconds.
Stand by.
It's really low. It's really low, ladies and gentlemen. I know it's exciting. The tension builds. It is 0.14% annually.
Pretty cheap.
I don't think it can get much cheaper than that. I mean, they have overhead. Thanks for the call. Be back in a minute. Don't go away.
Tom and Don are talking real money.
If you're one of the many podcast listeners who's asked, how do I attend one of your classes? Well, we've decided to take our very popular lunch ed classes that we've been doing at our offices and also do them in the form of a webinar online. At the same time, I'm doing the class live elsewhere. You can sign up for these live lunch ed classes right now at talkingrealmoney.com, talkingrealmoney.com. We have a limited number of seats available because we have to pay for them, so reserve your place right now. We're going to have classes in the future on a variety of topics, so check them out regularly at talkingrealmoney.com. It's under the event section. And there is a small fee for these classes, just $5, but you're going to get a great education, not a sales pitch, and a free worksheet and some other perks. So sign up for our next Lunch Ed class right now at talkingrealmoney.com, talkingrealmoney.com. And now, more Talking Real Money.
For your real life and real future, Tom and Don are talking real money.
It's our last Lunch Ed class of the year. It's coming up on Thursday, December 15th in both Tacoma and Bothell. And for your $10, not only do you get lunch, but you get a special holiday gift, which is the calendar, just for showing up. Oh, wait, you get a really good education, too, in a little less than an hour about how investing is supposed to work and how you can become a real investor. So don't miss it. Get your tickets right now. We only have a limited number of seats, and you can get those tickets at TalkingRealMoney.com. Once again, that's TalkingRealMoney.com. Go now. Hurry.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.